Hello and welcome to ET Soonicorns Summit. I'm Miloni Bhatt and my guest is Srini Ananth, Managing Director, Intel Capital. Srini, thank you for your time today. India has over 100 unicorns. They've played an important role in India's growth story in creating jobs. Technology-led growth is a key pillar of India's current economic thrust, and there's a lot of focus on areas such as space, green hydrogen, clean energy, drones, geospatial data, etc. Now, which of these sectors do you see as being the growth drivers and why? And what are the things that excite you about the Indian ecosystem and the growth story?
Again, Miloni, thanks for having me. This is, a great opportunity for us to talk about, India's tech-led growth as well as where Intel has been a piece of that. I think among all of the sectors you listed, I'm obviously excited about deep tech and frontier tech. We do a ton of investments in that space. But when it comes to India in the next decade or so, I think for me, three areas stand out. I would say one is high-skill manufacturing, especially when it comes to things like automotive, consumer electronics, and to an extent, semiconductors and the semiconductor supply chain. I know India is starting to get into those, but I would say that is one area of real growth that I see for India. We've been talking about automotive companies have already set up in a lot of different parts of India that contributes to a lot of GDP. And you've been hearing about the geopolitical situation, which makes India very unique in where they stand in the semiconductor supply chain as well. So I think that is one area of focus. Now, obviously, it requires a lot more investment and it requires a lot more incentives. But I think India can be a very vital piece of this global supply chain if it starts getting into semiconductor packaging and eventually to semiconductor manufacturing. I'd say that is one area of big growth. I think the next two are very obvious and very well known, but I see this could be driving India's productivity growth as well as GDP growth, and that is healthcare and health tech, right? And healthcare and health tech, all of this driven by the sort of digital transformation that's already been happening. But over the next 10 years, if you look at what connectivity enables, what mobile platforms enable, what high-speed internet connectivity enable, I'm looking at things that are remote diagnosis, for example, handheld ultrasound scanners that can be used in the field, tele-diagnosis that can be provided through sort of video platforms. I'm talking about things that are can provide you results and diagnostics in the field. So we are now looking at companies that can actually either test a sample of your blood or a sample of your saliva and do a lot of those testing at the point of care. And so imagine decentralizing that healthcare. And so that is a second big area of focus. I think that can be really productive and helpful for India. And then the last thing I would say is education, which has always been a focus. And if you think about the population that is sort of getting above the high skill literacy line, I think everything that you can do to improve access to education, improve access to training, and things like MOOCs, which are the massively online platforms. Obviously, through COVID, we've seen a lot of these platforms really take flight, and we've seen great adoption. But I think a lot more can be done if you think about the amount of access they can provide. So you've got internet connectivity, which is going out into the villages that can provide more and more of this access to education. So I would say manufacturing, healthcare, and sort of ed tech and education being the next three major drivers among all other things.
You spoke of Intel, of the internet connectivity, and as per a recent report by Deloitte, 2022 Global TMT, India will have 1 billion smartphone users by 2026, and internet-enabled devices in rural market will also get a push with government's entire plan to fiberize all villages under BharatNet. And, Prime Minister Modi has said that the value of the Indian digital ecosystem will then reach 1 trillion by 2025. You invested in Geo Platforms in 2020. And at that time, you said that the goal was to spur digital access to drive the economy. How do you see this next push, which is the BharatNet program, the connectivity, really powering digital transformation in India and the next wave of innovations that might emerge?
I think that's a great point. See, I think one of the biggest success stories in India has been, obviously, we know about Aadhaar providing a digital identity and then providing the payment rails and the mobile payment rails for all of the disbursement of funds as well as digital payments to take place. And it amazes me that we have a penetration of about, I think, 60 to 65%, depending on where you are, what report you read about penetration of mobile phones in India. And I think this is enabled. So if you think about the payment rails, mobile, easy access, and Geo has been partly a driver of that, is to provide broadband in the hands of everyone. And those things are success stories that we have already seen. But a lot more can be done if you think about bringing down the cost of smartphones, as well as improving the access availability to everyone. Right? Digital penetration has to continue at the same pace. So a lot of the work that we are doing with Geo is sort of optimizing Intel platforms to provide much lower latency, much faster access, and doing this at the infrastructure level. Intel obviously powers a lot of the world's data centers as well as telecom networks. And so we look at this as how can we empower that? How can we power the digital transformation? So let's assume all of this continues at the same pace and the same growth. More villages have access to fiber, more villages have access to wireless connectivity. I think the smartphone has been a wonderful platform for what we have seen with payments, what we've seen with sort of e-commerce applications. It's great to have delivery at your home, but all of these are, I would say, low speed and sort of low data usage. It's not the highest data usage. The biggest data usage is actually in platforms that are interactive like this. Zoom sort of struggles with this. Delivery of education, delivery of healthcare, and things that use more of video bandwidth. So if you imagine an era of ubiquitous connectivity, if you imagine an era where you have high-speed phones and high-speed wireless, you can start doing a lot more in terms of education delivery. So imagine you can do classes where people can ask questions and interact with their instructors. Imagine if you can do interactive experiments. You have access to microscopes and national labs that can be provided to kids in the smallest of villages. And so all of these sort of get enabled. We always ask ourselves, what do we do with something faster? And we say, oh, maybe we don't need that speed. But believe me, it's sort of, there's the law of, expanding applications is that you fill more and more of those bandwidth with more content-rich applications and more interactive applications. So I would say one is definitely the penetration of high-speed platforms is going to enable better delivery of healthcare. You can do remote patient diagnosis if you're able to see in high quality and high resolution. You can do more real-time monitoring within agriculture. A lot of connectivity today is very spotty, and so even though you don't need high speed, if you think about ag tech applications, if you can add sensors in the field and if you can monitor them continuously, it helps the farmer know when to plant, what is the weather impact, and when do I, how do I do my harvesting program? So you have IoT and ag tech, which is one big area that can be enabled with more connectivity. You have obviously education, and then you have healthcare. So all of these things only get better with more penetration. And to the point where having a mobile platform is literally the first computing device in anyone's hands, right? And eventually you can think about creating applications for your own local communities. I think India has done another great job is to have the delivery of government services, to be able to do a lot of your civic services through these mobile platforms. Yeah, and all of these are, I would say, to an extent, even better than what we see here. I would say the payments infrastructure is far better than what we see here. We still have a lot of friction. It's not technological here. It's more of different wall gardens. So I'm definitely excited about what has come so far, and I'm really excited to see what happens in the next decade. But I would say, as much as it probably sounds a little boring to say, hey, it's not four-dimensional holographic AR, VR, or whatever, because a lot of these are base of the pyramid sort of things. If you can provide this in a much better way, you provide better delivery of the same services. So I think the next 10 years is going to be all of these impacts within ag tech and healthcare and education.
Okay, but I do want to talk about the blue skies, the AI, IoT, and the
Sure.
blockchain. In this next question, NASSCOM, which is the industry body, the National Association of Software and Services Company,
Mhm.
has said that essentially all of these deep tech startups, which are operating in emerging technologies, AI, IoT, big data, analytics. They grew at a compounded annual growth rate of 53% over the last 10 years in India. And as of calendar year 2021, there were around 3,000 of such startups. And just in calendar year 21 itself, over 200 were launched. I know you said that we need the baseline, to go and grow, which will be the edtech, the health tech, and stuff like that. Powered, of course, by better internet connectivity. But how do you see startups in India leverage their strengths uh, to make India perhaps a hub for deep tech?
No, I think that's definitely a good point, right? I think it's very well known that India is in this third wave of innovation. And I left the country. I left India in '98 when it was Y2K, and then the first wave of dot-com era startups were in place. We had the BPO and innovation driven by the internet era. I think you definitely had consumer driven, and you had a lot of consumer apps, and India was very quick to adopt all those. And I'm not even pleasantly surprised. I'm excited to see the sort of third wave. And the last couple of years, I've already been telling people that I've met startups that are working on quantum post-quantum security, startups working on photonics, startups working on IoT within automotive, and all of these deep tech areas, as we call. And I spent a lot of my time in that deep tech space. And so I think there is one thing I did want to mention is I mentioned semiconductor early on. One thing that has been lacking in India, I would say, is this sort of design ecosystem. And how do you design chips? How do you manufacture chips? And that's the toughest thing, is to sort of manufacture chips. We always say that space is, it is space tech, but the semiconductor supply chain and just the process of building a processor, which has more than 1,000 steps, and is one of the most capital intensive industries, that is definitely a competitive advantage. So I think that is an area that India can really take on. You don't have to manufacture the chip, but if you start adopting more and more of those design and architecture techniques, which comes in teaching electronic design, teaching digital design in schools and colleges, and getting to build startups in that place, I think that powers a lot of other industries. So one of the areas that I'm definitely looking forward to see is this idea of having a complete IP and chip ecosystem. I think I'm starting to see, obviously, in the IISCs and IITs. But imagine that, there was a time, and I remember, if you were in Hyderabad, you could take a course for learning Oracle data warehousing and all those things. And I think that's what you should see now is chip design and the variants of that, right? Those are the things that need to percolate down to all the colleges to have a better skilled workforce. Because one of the biggest things, if you think about it, the first tech company in India, or the earliest ones I remember, was TI in 1984. Imagine a design company which was building chips. But what they actually had in India was more of testing and software applications. And now, full circle, if you come back, every company in the US has a digital or a design center or some sort of R&D center in India. I think so. We need to start seeing product companies, and we're already starting to see that. Space tech has been well talked about. The advantage that ISRO has in delivery of satellites is obviously a huge thing. There are maybe 500 plus startups that have been funded in space tech. But if you come down to what is the low cost launch, there are not that many companies. It's very tough to sort of launch and maintain the economics. So I think that is one area where I see India having an advantage, obviously with ISRO, but I've heard of a couple of other startups doing that. I would say things like biotech and nanotech, they do require some amount of capital expenditure and spending. And the pharma in India is probably needs to catch up there. I think there's a lot of pharma production, biotech drug production, but it's not the same in terms of what infrastructure, let's say Boston or South San Francisco have. So that is one area that India definitely needs to make a lot more investment. And then as you go down that, we talk a lot about manufacturing. The manufacturing that we need to see is not just labor intensive, but something that has automation and what we call Industry 4.0. And that means having more of process, having more of IoT level monitoring, having continuous optimization and things like that. So I think I've met startups that are on the automotive floor and that are making great improvements there. And so that's another area that I see that we talk a lot about AI and ML. You probably notice I've not mentioned the word AI until now. And that is because we look at AI as the base layer for everything, right? AI powering all of these, and it should be ubiquitous. It should not be AI first, because AI is sort of part of every one of these things. We see AI in chip design. We see AI in advanced manufacturing. So all of these startups need to have that at that core, but I'm looking at the various verticals they can go and fulfill.
Intel has announced a new $1 billion fund to support these early stage startups and established companies when it comes to disruptive technologies for the foundry ecosystem. I'm wondering if, what you just told us, is that the thought process when you're going to evaluate companies, when it comes, companies from India especially, and what are the opportunities perhaps for Indian startups? Let's start with that. And then, if what you've said is the sort of lens that you're going to apply.
Yeah, I think I'm one of the two co-managers of that fund. And this is a fund that we announced earlier in February. It was a year ago when Pat Gelsinger came and joined us from VMware. He announced that Intel would be opening up its fabs to the world, right? We wanted to become that third large, we wanted to make what is called a foundry, essentially becoming the AWS for hardware startups, right? You are able to provide manufacturing, you're able to provide IP. And so part of that is what do you need to build around that to support all of these startups. And that is, you need to build the ecosystem, you need to build the tool sets, you need to build the software. And so our $1 billion fund was a way to announce that Intel is serious about this, and we are willing to support the startups with this fund. And when Intel, typically we do these funds, it's meant to be invested in a period of time. It's not per year. It is meant to go as long as it's required and to support these startups. So we announced like 3 kinds of investments. One is essentially what we call investments purely in the equity of the startups, right? We can pick some Series A, Series B startups that are promising in areas of silicon photonics, in areas of chip design, IP, invest. The second is strategic investments, where Intel Foundry Services, which is the new business that we created, and Intel Capital together work with the startup. We might have some in-kind as well as some equity investment. And the third is purely what we call ecosystem investments. It could be material contributions. It could be non-recurring engineering. So coming back to the lens, what are we looking for in startups? Since February of this year, we met close to 150 startups. We met startups that are doing everything from what we call RISC-V based design to startups that are working on electronic design automation, startups that are doing packaging, which is a key part of how semiconductor chips are built. We are looking at startups that just provide the IP. And there are some startups that come and say, hey, we'll help you with your manufacturing. We'll help you monitor your manufacturing. And so all of these are areas where Indian startups can participate. There is no bar for any of these. I mean, the bar is essentially, can you meet sort of the needs of the foundry ecosystem? Do you have a good set of or a team around it? And so the same bar that we apply to everyone, there is no different bar for Indian startups. I would encourage everyone to look up Intel Foundry Fund. It is IFS Foundry Innovation Fund. And you can, reach out to us and we'll be very quick in our response.
All right. Well, in the startups whom you've spoken with so far in connection with this fund, have you had a lot of interest from India or Indian startups?
I can't recall, from the 150, but I recall talking to one last week. But I have talked to maybe a couple over the last couple of months. Obviously, there have been a lot more startups from the West Coast. There have been startups from, I would say, everywhere from Taiwan and Korea, Israel, and a lot more in US and Europe. I think you can sort of track where you see the government is starting to invest and talk about semiconductor, right? I think you've heard about Germany and France and EU starting to put dollars to work and say we need to build this ecosystem. Obviously, Korea and Japan have already been mature semiconductor ecosystems, so we do see startups there. India, I have met a few. The one I met most recently last week, they seemed excited, and we're going to probably continue the conversation and see how it goes.
Right. You work alongside. I mean, you've invested in startups, and you've seen their growth. I want to talk a little bit about uh, the issues pertaining to corporate governance, sustainable growth, and profitability. Obviously, startups have played a very important role in India's growth story. And now there's growing recognition, of course, that, all of these other things, for instance, you need to be, sustainable. You have to be profitable. The monies that you spend in acquiring customers, there have to be some guardrails around it. There have been a few controversies with startups that have highlighted toxic work environment, lack of accountability and responsibility. Uh, Having worked with the ecosystem in the US, what do you think can be done to foster the right values as far as India's ecosystem goes?
So I think you've hit about on a couple of different areas. So maybe I'll try to address in the order. So you mentioned sustainable growth, corporate governance, and sort of how do you deal with controversies and lack of responsibility. So sustainable growth. I mean, we joke about it, but in a way, for the last 2 years, or in fact, almost the last decade, we've had very low interest rates. We had a lot of money going to startups, and it has been an era of very easy access to capital. And so when that happens and a lot of people are chasing the same opportunity, there is less of a focus on metrics, and that has driven some bad behavior. And so today we talk about the era of is your unit economics actually profitable when you're scaling, right? The idea was you show some product market fit, and then you get a little more capital for growth, then you show that it can be repeatable, and you're supposed to show that it's profitable on a unit basis before you scale. But this idea of blitz scaling and pouring a lot more capital than the company is ready for has resulted in a bunch of bad behavior. And we are seeing that the stock markets have punished a lot of those companies. So definitely the focus is back on economics. Now, different startups, different sort of metrics. You can't ask a deep tech startup to show you profitability because most deep tech startups take about 2 or 3 series of financing to actually get to product. But we look at, are the startups set up well to absorb the capital? Are they being prudent in how they spend? And are they doing the right things, right? And a lot of this comes down to the board also. The board has been very lax when everything is great. When you can go back and raise a Series A and Series B and Series C in short bursts within 6 months, 9 months, you always think I can go back to the well. But now, if anything, we are looking at all of these growth metrics. We are asking for startups to show us a revenue track. We are asking startups to show that they're profitable on a unit basis. There is more a focus on how well they're growing, how well they're spending their capital. So that is one. I think sustainable growth is back in fashion, but it should have always been. There is no different. Second thing is, how have you dealt with controversies in the past? Usually you kind of, there is always a blind eye sometimes turned if the founder and the startup is just growing in metrics, but everything else is swept under the carpet. And so now you have this focus. I mean, we've seen TV shows made about a bunch of these entrepreneurs, and now you're starting to hear that we don't want to fund such people, right? There will always be capital, obviously, but I think there definitely needs to be more responsibility at a board level on what sort of things are no-go and how you need to sort of nip them in the bud. I think that definitely needs to be done. And this goes back to what is the responsibility of the board. A lot of boards generally, are founder friendly, and founder friendly means you give a pass on a lot of things, and that can be the case. And the last thing is sort of accountability and responsibility. I think that comes from the leadership and what the leaders do. Like we've always heard stories of growth hacks, and we do whatever it takes. But the question is, how far is too far in whatever it takes, right? When you do things like that are unethical, that are things that you wouldn't be proud to talk about 5 years later, those are not the kind of growth hacks that you want to do, right? Going and standing in a line to get the first of something is can be one way, but if you start doing things that are unethical in trying to grow, trying to learn about your competitor or do something, those are the things that can get you into trouble. So eventually, I would just say it comes back to that leadership and the kind of leadership that you bring on board, because most of the startup, it follows the leaders, it follows the board. So that's an area of focus. I think we've always been in our diligence, we are very careful about any of the founders and the founding team, and we do extensive diligence. Obviously, with all of that, you can still miss things. But we are sort of hyper-focused in our diligence on all these other non-metrics, right? All the things that can actually impact the startup in the long term.
Right. When you see startups in India, when you see startups in North America and maybe elsewhere, the founders, the companies, ideas that are emerging. Can you talk a little bit about, similarities and differences and the areas that you specifically think Indian startups and founders especially could focus on?
Yeah, so if you take the broader, and I'll stick to tech because that is where I've spent most of my career, almost 2-decade career just in the tech space. So I can tell you that the Indian startups, when I talk to them, have some of the same ambitions. They come from the same place. They're looking at building large billion-dollar businesses. They aren't any more conservative than the others. They're aiming for some of those same things, right? They want domination on a global scale. They want to scale up. I think the big difference is obviously the ecosystems that exist. So if you're whether in Silicon Valley here, or if you're in Boston, or if you're in Seattle, you have a good tech ecosystem where failure is okay and you can move back. I think India has obviously gone 180 from one time that I was there to where you can fail, you can start the next company, it is okay. I think that is one of the biggest things, right? Entrepreneurship and risk averseness don't go very well together. You need to be able to fail. You need to be able to start small. So I think the Indian startups, one thing obviously they differentiate on is the age of the average employee there and where they come with what sort of educational backgrounds. The second thing is, if you think about the R&D costs and the spend, obviously there is a labor benefit in India. Your dollar goes a long way. So some of the things are equal, right? You will spend the same amount of time on a robotics component, whether here or there, but you can make your runway last a longer time. I would say there is a general sense of scrappiness. You are able to put together with a lot less. One of the other differences I see is there is less a focus on marketing in India as opposed to the startups here for a relatively equal stage, equal size startup. Distribution is a big thing, right? Once you get to your product market fit, how you distribute, how you do your go-to market. And so there is that scrappiness in India, which goes a long way, but sometimes you need to start spending on marketing and distribution, which means you need to go out, you need to hire people in other geos, you need to go and you serve your customers well. So I do see a little bit of difference. There's more R&D teams, more scrappier teams, but when you start expanding, you need to start hiring the right people. You need to start hiring the right salespeople. Some of that comes from experience and some of that comes from people with domain experience, right? So you need to go out and hire that experienced folks. You're great as 4 founders coming out of IIT or IISc to start that company, but the next stage of growth requires people who have spent time in the industry, because some of these doors don't open that easily. Enterprise sales especially is not easy. So bringing that people with the right sort of business IQ is one thing. You mentioned what else is different and similar. Just in the deep tech space, I'll tell you that a lot of deep tech startups are spun out of academia here. They are spun out of the MITs and Stanfords and Caltech, and they're also funded by a lot of non-dilutive funding. And by that, I mean, there are organizations like DARPA and ARPA, which are defense and advanced research projects. So a lot of de-risking of technology is done at the academic phase. And so by the time they come, they've almost de-risked the technology and they come out and they're mostly building the product, right? And so I think India obviously has some institutes that have that, but you don't have the same kind of government funding going into deep tech yet. And so the advantage of 50 years of defense funding and Department of Energy funding is the reason you start to see some of these startups come out in material science, in photonics, or even in quantum, because there's been hundreds of millions and billions pouring into these institutions for a long time. And Intel is one of those too. Intel funds about 15 to 20 different universities around US and Europe. And so a lot of that money finds its way into startups. So I think India is lacking that. Hopefully we start to see that gap close.
Yeah. India's funding when it comes to research and tech is 0.7% of GDP. So it's really low. And, as you say, it needs to go up. The other, space or the other element here that you don't see a lot is also women in India's tech-led growth. How do you see the role of women in India's tech-led growth? We've got abysmal numbers in the formal economy, and about 20%, I think India currently has among the lowest female workforce participation globally.
I think that is definitely a disappointing stat when you think about it. And I believe it has been on a decline for a while, which is what is even more disappointing, is that what used to be the case in 80s and 90s is no longer the case. So I think obviously there's a lot of long-term factors that have been in play, right? If you think about just, again, access of healthcare, access to education, and having all those, which creates this divide. By the time they're 17, 18 and of college age, you start to see them dropping out of education, dropping out of the workforce. So all of those need to be addressed, and I'm no sort of politician or macroeconomic scientist who can tell you what to be done, but there's enough documented about that. But just focusing on what can tech platforms and what can tech companies do. So I think one is obviously, we talked about these platforms like Zoom and everything that have made education and the delivery of education easy. I think one of the things we saw during COVID is if the school is not open and you can't go to the school and you're in lockdown, you at least have access to this. And so if you think about a kid in a village or some place who have to travel 3 to 5 kilometers to go down to their school, and maybe the parents decide not to send them, if a smartphone is one way to deliver it, something is better than nothing. So you start off with, we talk about Khan Academy or Udemy or Coursera, those come on at the later stage, but there are some basic curriculum or delivery of education that you can start doing at the earliest levels. As you go up into the sort of college age and where you need to start providing technical education, I think a lot can be done in terms of vocational training. And by that, I mean, you have a lot of trade schools. If you go to countries like Germany, there are trade schools to teach you certain skills, right? And that is something that India can obviously provide in maybe even provide unequal access, more access to women. Because when I think about advanced manufacturing early on, automation is going to come, but a lot of sort of assembly of consumer electronics and phones and everything, you still see a lot of people standing on the assembly line. And that is something that can be skilled training. Right, you can be trained in that. You don't need to go to a 4-year degree to learn that. So access to some of that vocational training to be able to participate in manufacturing, because that is something that I see whenever I see things about China or Vietnam and other places. There's a higher participation of women because those labor-driven jobs are high. Now, construction is also a labor-driven thing, but construction obviously is much more extreme conditions and it's not easy. When it comes to tech companies and participation of women there, I think one of the biggest issues we have seen is, one is safety. One is just access to having these paid, FMLA, we call it FMLA, which is paid maternity leave. The ability to take a break, whether it's short or long, and to be able to come back to the same position or the same company. That's not something which is there. Right, all of these will help the women stay within the workforce and proceed. Because if you start skipping out in, let's say, your 20s, the chances are it's very tough to come back into the industry, and you might start to find an alternative job or alternative career. And I know people in my family who've gone through that. So those are the things that tech companies can do, and tech companies already do that in other geographies. And so that is something that I think all of these will definitely improve the participation, but we're still talking 20%, right? Yeah. And so even having 5 to 7%, and the goal seems to be to get to 30, is admirable, but you got a long way to go there.
Yeah, and yes, it's a long way to go, but imagine the potential, right?
Exactly. Yeah. I mean, that is one of the beauties of when you have a 1.2 billion base, you're talking every 1% is a lot of people that are participating, and the contribution to GDP is so much higher. And that's why when you see a geo platform is the largest, it's because they have 40% or 30%, and that's 400 million users. Where do you get that kind of users, right? And so I do think India has the benefit of that, the median age being low, the participation being high, but I think bringing women up obviously benefits everyone.
Right. I have this last question now for you, Srini. You know, markets are falling. There's high inflation, slowdown in business momentum. In this backdrop, as an investor, have you shifted gears? And what is the strategy for investments over the next 18 to 24 month period? And what's the sort of advice you're giving portfolio companies to tide over this period?
So we've started looking, you know, if you go back to Q2, we already started seeing the stocks and the stock market take a dive in Q1. By Q2, we already knew that some of those indicators were showing that there's a possibility of recession, and maybe just having COVID-driven fall or the fear 2 years back, we sort of moderated our response, right? When COVID happened, it was immediately batten the hatches. What do you need to do to survive? And so this time, some of that messaging is obviously we still continue to invest. Intel Capital still continues to invest at the same pace. We plan to do, you know, anywhere between 300 to 350 million a year. We haven't changed the pace. Now, the quality of startups that come and raise at the same time is obviously higher now. Not a lot of startups are coming out and raising if they don't have the metrics. So the focus is on metrics. The focus is on sustainable growth. So our advice to our own portfolio, first of all, is if you do not need to go out and raise right now, and if you have enough capital to sustain, let's say 12 to 18 months, continue to, you know, work on product, heads down on product. Now, if you are at the place where you're less than 12 months or less than sort of 9 months, obviously it gets a little difficult. Then there's a lot of, can you raise at the same valuation as the previous round, or can you raise a little bit more in a convertible note and don't go out and raise a complete round? And so there have been interest in some startups for the same investors, the insiders as we call them, to contribute more capital on the same valuation as the previous round. So that is one way you can provide them a longer runway. And so they can get over this and come back in, let's say, Q3 or Q4 of next year. Now, no one knows how long this is going to continue, right? It's all driven by interest rates. It's all driven by the possibility of recession there. So when it comes to newer startups, I think we would just advise now, or we've been telling our startups to raise for a little longer runway. Before, it was the expectation was every year you would go out. And especially if you're doing really well, the VCs would approach you and preempt your round. And so now that equation has changed. If you were going to raise for 18, probably think about 24 months or think about 30 months. If you're thinking about hiring 100 people or 50 people on this round, maybe think about hiring a fewer, 30 or 40 people, and think about extending your runway by hiring in other low-cost geos. Because one thing you don't want to impact is the growth of the development of the product itself, right? You can take away a lot of capital, but you don't want to slow down because whether it's deep tech or SaaS, the opportunity size is not changing. What is happening is current conditions, but the opportunity is not shrinking yet. So you don't want to let go of that. So we ask them to hire the most key people, and maybe some of those other long-term scaling partners or HR and other functions, we ask them to look for it later. So I think the focus is definitely, again, the theme was sustainable growth. The theme was, but growth is important. You want to continue growing, you want to continue building the product, and we'll invest in the startups that we think meet all of those goals.
All right. And, more power to you. We wish you all the success. Thank you so very much, Srini Ananth, Managing Director, Intel Capital, for joining us today and for really giving us your thoughts on setting the agenda for tech-led growth to power the new India economy. Thank you for your time.
Thank you, Miloni, for having me. Have a wonderful day.